So, you want to buy a home in Irvine with less than 20% down. It's never going to happen. Just kidding. In today's video, I'm going to be breaking down how much you really need to put down on a home to buy here in Irvine, California. But first, I am a realtor here in Irvine, so if you are looking to buy, rent, or sell, make sure you reach out to me. All of my information will be in the description below. I'll also put my number right here. That way you can easily give me a quick text or a call. But now, we'll get back into the video. So number one, 3 and 5% down. Is it possible? Yes, with actually a VA loan, you can go as low as 0% down, but that's only if you're active duty or retired military. So we'll just kind of put that to the side. But just know you can put 1% or 0% down rather. But with 3% down in a conventional loan, if you qualify, this is possible. You can do 5% with a conventional loan. This is possible. You can do 3.5% down on a government loan with an FHA, and that's also possible. For instance, if you bought an $800,000 condo in Irvine, you're looking at roughly $24,000 to $40,000 down, not $160,000 with 20% down. Now, it's still a lot of money, but getting rid of this myth of 20% down where the median price is $1.5 million in Irvine, it's unrealistic for 99% of buyers. Now, you might be telling me, Ryan, what about private mortgage insurance, PMI? Yeah, you'll have PMI. But on average, PMI is going to be $100, $300 a month, depending on your credit score or how much you're putting down in the loan. But if you want to buy an $800,000 condo and your mortgage is going to be let's say your mortgage is $5,000 a month, and then you have a private mortgage insurance of $100 a month, and now you're paying $5,100 instead of $5,000. But you now own a home and you're building equity at an average rate of 5% a year, paying an extra $100 a month is not that big of a deal. Number 3, waiting to put 20% down could actually hurt you. Raise your hand. Don't raise your hand actually, but raise your hand if you wish you bought a home 5 years ago before homes went up 60% depending on the area. I do. And if you were waiting to put 20% down 5 years ago, let's just call it $100,000, is now $150,000, $160,000, $170,000, $200,000 in some areas. So either you could have bought and had pretty much a double the price of a home or 150% of the home and got a couple $100,000 in equity by now, or you could have been waiting to put that 20% down and now you're ready to put your 20% down, but the 20% 5 years ago isn't the same 20% today. So, waiting to put 20% down could be worse than just buying now. And number 4 is there's programs that help you with down payment assistance. There's CalHFA with an FHA. Like I was just saying, you can put 3.5% down depending on where you work. There's different benefits. There's so many different ways to just get you in now so you can start building this equity and stop putting in your mind that you have to put $300,000 down because you don't need to. So number 5, what does it really take to get started to buying a home? I'm going to summarize how to buy a home in 60 seconds. Number 1, get pre-approved. Make sure you know what your upfront cost is and what your monthly cost is. I don't care about the actual price of a home. Don't say I want to buy a $900,000 house. No one really knows what that means. You have a set amount that you're comfortable spending upfront. You have a set amount that you have comfortable spending monthly. Tell your lender that depending on today's rate, he'll tell you how much you can buy. Then you go to buy the house. What's the first step? Talk to a realtor. They'll help you find the house. Pick a good one. Then you're going to go look at the home. Then you're going to write an offer. Then once it's accepted, you're going to get into escrow. You're going to make sure that the home appraises because you have a loan. Then once the home appraises, you're going to remove contingencies. Do your inspections. Make sure that, not in that order. Do your inspections, then remove contingencies. Once you remove your contingencies, you're going to have pretty much to sign a couple more documents. You're clear to close, you're in a home. It's that simple. It's not that simple, but it is that simple, but it's not that easy. But that's how you can just own a home now instead of waiting 5 years until you have the 20% down. But that's debunking the myth of needing 20% down. If you enjoyed this video, make sure you subscribe. I release videos every single Friday detailing the benefits of homeownership and how to buy a home, just like in this video. So if you enjoyed this one, again, make sure you subscribe so you don't miss out. But as always, thank you so much for tuning into this week's video. I can't wait to see you in the next one. We'll talk soon.